Hello and welcome to this week's Australian Stock Market Report. Now this week we'll answer the question, should you leave cash in your broker account? We'll also look at Sayona Mining, Tyro Payments and AMP. And as usual, we'll get into the Australian stock market so I can share with you my thoughts on where it's heading. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click the little bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Daylight Saving Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now, when the stock market is volatile and falling, investor psychology is often amplified, with many making irrational decisions. During the GFC, many investors suffered from loss aversion as they refused to accept that they had to sell their shares for less than they'd paid for them. And the same behaviour has been repeated over the past few weeks as the market fell. The market rose strongly between June and August of this year, and investors were jumping into stocks prematurely, believing that the bull run had started, only to find out that the movement was a sucker's rally. Now that the market has fallen back to around the low in June, investors are sitting on losses, asking if they should hold or sell. Now, whilst the majority want to hear that they should hold, now if I were to say they should sell, at least 90% would ignore the advice because they are suffering from loss aversion. In reality, what they're asking for is validation of their decision to buy in the first place, because most investors believe they must never lose. Their psychology is such that the thought of realising a loss is untenable, so they avoid making a decision to sell and live in the hope that the stock will rise back up or above to what they paid for it. Now, investors also make excuses to justify the decision for buying, but an excuse is a lie covered with the skin of reason. Consequently, they don't want to accept that they bought based on emotion or due to greed and the fear of missing out, or FOMO, rather than sound analysis and a solid trading plan. The market will always do what it does, regardless of your expectations or emotions. Good investors know this, which is why they listen to what the market is telling them and act accordingly without emotion. Investors who fail to follow this logic were hit the hardest during the GFC. And this will continue to happen whenever the market falls, unless you choose to proactively change your behaviour. Now it's time we get into what were the best and worst performing sectors last week. But before we do, please click the like button now to show your appreciation for this video, and as this shows your support for the channel. The best performing sectors included healthcare, and that was up 1.72%, followed by communication services up 0.7%. And consumer staples, that was down 0.03%. The worst performing sectors included utilities, and that was down 3.84%, followed by financials down 3.11%, and industrials was down 2.92%. The best performers in the S&P ASX top 100 stocks included ResMed, and that was up 5.59% last week, followed by Northern Star Resources up 4.54%. And Insurance Australia Group, that was up 4.31% last week. The worst performing stocks included Virgin Money down 14.69%. That was followed by Macquarie Group down 7.75% and Origin Energy that ended the week down 7.18%. Before I get into my thoughts on the Australian stock market, if you are new to the stock market or you've been reading books and watching YouTube videos, but you're still struggling to make money, lack confidence, or maybe you're even unsure what you need to do, then consider enrolling in our Trading Mentor course. This course will change how you view the market, it will increase your probability of success, and greatly improve the profits you can make. In our Trading Mentorship program, we will improve your probability of a winning trade as you learn how to combine technical and fundamental analysis to analyse stocks and get expert support from myself and our team all the way along. To find out more, visit wealthwithin.com.au and click on the Education tab in the menu, or give us a call on 1300 858 272. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. I think I've becoming a broken record saying, wasn't the market interesting last week? But then I find the market interesting all of the time. And I know last week, most of the fall we had for last week, I think we were down 1 point something percent. I'll check that in a minute. But most of that fall happened on a Monday. Well, Tuesday closed up, Wednesday closed down. We made a slightly lower low. Thursday was up really, really strongly, and Friday closed down. So our market was struggling to fall even further than what it did on the Monday, and it's really finding some support around that June low that we did have. But let's go and have a look at the chart to see if that June low is going to hold or whether we need to expect some more downside. But let's get into the chart. Now on the left is a monthly chart and on the right is the weekly chart. I'm going to bring up the monthly chart first. Now, as you know, I've always saying, with that all-time high that we had there in January, I've had a couple of scenarios, and we'll show you those on the weekly chart for those people who have been watching long enough. And I said a couple of the scenarios, that one would be that we fell away and we found some support here or prior to this low here at 6581 and then went bullish. The other scenario was that whatever run up we had here wouldn't last, and then the market would fall away and go below that low of 6581 points. Now, the way it looks right now, we're seeing here that August was really, really nice. We had 8 weeks straight up, and then end of August, and then obviously now we're into, this is the end of September there, which finished last Friday. We're seeing 8 weeks pretty much straight up on our market, and then the last 5 weeks or so it's just been pretty much straight down. But we are holding up above this low of 6581 points. So should it hold? Maybe. And right now the pendulum has really swung the other way, and right through here up in week 6 or 7 I thought, well, maybe the pendulum has really swung to being much more bullish, and that will move higher for the rest of the next month or two, move up and possibly even challenge that all-time high. And that's what I was thinking after 8 really nice strong weeks moving up. I thought if the downward move is only slight, and then we would turn and then start to move up. But these last few weeks or last 5 weeks has shown how much more bearish the market sentimentality is. And you know why when you see so much negative news on the marketplace, and mainstream media is always quite inflammatory with their news around what the market's doing and what it actually means. I don't think our market is a basket case at all. I think our market is still really good. The economics are still there, and yes, there's stuff going on in the US, but I don't even think the US is that bad. I think right now it's just the bearish news that is really causing the market to be really bearish. But there's some really strong support around 6172. Now, if we look here and we see this longer term move, so we see the move out of the GFC low, that's momentum, is this dashed line. So it wouldn't surprise me if our market came down to that or slightly below that. But you can see there's big long-term momentum around that level, which is just under around 5,700-ish point, depending on where we are at the point of view there. But I don't think our market will fall below 6172. Now, that's what I'm thinking now. And whilst it can fall below that, I don't think it will. And that's where a lot of people need to understand with us experts, we do make analysis, and we make predictions, I suppose, if you want to call them, but nothing is 100%. And this is why I constantly have said all the way through here, always we need to wait for confirmation, not speculation. And people jump in through here, they've jumped in through there, speculating. Now, this is probably a sucker's rally at this point in time. It is really looking like a sucker's rally. And we see people, retail investors, jump into these sorts of areas only to get caught by the downfall, because a lot of investors don't sell. And as I was saying a little bit earlier in my report today, we find so many investors, they love buying but they hate selling, and generally it's 8 to probably 90% of people, but they just don't like selling because they don't want to realize the loss. And you may be sitting in a loss, that you bought a stock through this little area here, and you may be sitting on a loss at the moment, not wanting to sell, and then you do the buy and pray method. Then you're praying it will actually go back up to where you paid for it or above it, so you can sell out then. But right now it's not the time to be getting into the market or into new positions. It's not the time to be bottom picking at the moment. So it is possible we'll find some support above there. So this week it could find some support and start to move up. If it does, this could be a nice little dead cat bounce, which is slightly different than obviously a sucker's rally here. And it's really possible that we could get a little bit of a dead cat bounce here and it takes off like a rocket. I don't think that's going to happen. I think probability is suggesting that we're going to have a little bit more downside. Now I'll go over to my weekly chart, and this I haven't changed at all, and you know that I don't change this too much if you go back. These were my original predictions for the low into June, and you see how it went. And then after this low, I said there's two things that could happen. We could move up for a piece and then come down and either double bottom with the low in June or go below that low in June. The other one, as we go up, come back a short period of time and then take off. And obviously this red one is the one that's a play it right at the moment, and that's why we always have a couple of scenarios and we always wait for confirmation, because that's a beautiful move up there for 8 weeks. But you can see the last 5 or 6 weeks here, closed lower, closed lower, closed higher, closed lower, closed lower, closed lower. So we closed lower on 1, 2, 3, 4, 5 of the last 6 weeks it's closed lower. And as you can see, last week was quite bearish. Now it did come back a little bit on the Thursday. You can see a nice strong bar on the Thursday. Friday's bar was strongly the other way, but you can see that's Monday's low. See, most of the move happened on Monday, and it's pretty much sideways from there. Tuesday was up a little bit. Wednesday dropped back a little bit and slightly below the low on Monday, but it came back later in the day. Thursday really nicely, and Friday there. So would I say it would surprise me if our market just turned around and started making green bars and going up? No, it wouldn't. But probability is suggesting that we're going to have a low somewhere between mid-October and mid-December, probably more likely at the end of October into mid-November, somewhere what I was talking about here, this sort of area there. And it wouldn't surprise me if it was around that level that I talked about on our monthly chart here, about 6172 points. But at the moment, it really is a point of just sit on your hands and wait and see, because you don't always have to be in the market, and you need to understand you do have to have rules. And I know a lot of people say, well, you said this, Dale, or you said that, Dale, and I'm always going to have two sides of the market. What if it goes up? And what if it goes down? Because you always need to have both sides of that to know what you're going to do if it does either, especially when you've got markets like we've got at the moment, whereas they're a lot more volatile, there's a lot more emotions around in the market, and you do need to be careful with what you're buying and buying good quality stocks. Too many people are buying stocks that are just getting ramped up and then ramped down again, and be getting what I would say manipulated on the marketplace. So always know why you're buying, always do your analysis on why you're buying, but always, the more important thing, anybody can throw a dart at a board and buy a stock and it goes up. Anybody can do that. You don't need to be Einstein, but what happens is the real traders come out is managing the money and knowing when to sell. And that's why I was saying to you a little bit earlier, if you're still unsure, get into our Trading Mentor course. It will tidy all of that sort of stuff up. It's not going to teach you to be a full-time trader. It's our beginner getting started course. But we've had people that have been trading for a few years do that course and go, oh my God, this is your beginner course, and I've learned so much. And it really will tidy all that up, because it's cheap as chip. It's like seriously cheap as chip, this course. And it will pay for itself really quickly by showing you, firstly, how not to lose and how to protect your profit and how to exit the stock, but also how to make a better buy. And all too often we'll see, Janine and I will see on our live show, that people will buy stocks just at the wrong time and get caught, or they'll go, hey, how do I stop, a stock that I own gapping down through my stop loss? Well, you have a better buy in the first place. Pick the right stocks and do a better buy, you'll have less issues with those sorts of things. And it's understanding this, and it's what we teach you throughout our courses and the support we actually do. But right now, I say sit on your hands. As I said, I think what we might find is the next probably 4 weeks-ish, our market will be weak, and we'll probably move down into the end of October-ish and probably have a low possibly between the end of October and mid-November, and then our market will go bullish from that. But I think that's more the preferred scenario right now based on what I'm seeing, but I'm not ruling out our market could just flip on a dime and just take off like a rocket right now. And I know that's a more positive view, and sometimes as analysts we sometimes have a positive bias or a negative bias that doesn't allow us to think more aggressively towards the other scenario, and that happens because we're all human. You're human, I'm human, and maybe I was a little bit more bearish than I needed to be during those 8 weeks, bullish in those 8 weeks going up, and maybe I was a little bit more bullish or had a more bullish bias that I should not have had. But 8 weeks straight up, that's amazing. As I showed you at the time, we haven't seen that for a long time, 8 weeks up. But right now, I can only do what the market is telling me it's doing, and right now it's telling me it's going down. I don't think it's going to go go down for too long or too much in price. So I'm not worried about a major correction like a big meltdown. I'm not really worried about that at all. But at this point in time, just protect your capital. That's really what I'm saying. Now's the time for us to get into your questions. Now, the first question we have today is from Scott. Now, Scott's from New Zealand, actually. So, hi, Scott, and hope you're having a fun time over there in New Zealand. He said, hi, Dale, what is your view on leaving significant amount of cash in one's broker account? Are broker accounts any more or less safe than a bank account? Thanks, Scott from New Zealand. I mentioned I was going to answer this sort of question on our live show last Tuesday. So, as I think it's a really important question that you need to ask. And too many traders, and what I mean by too many, I'd say at least 90% of traders don't know where their money is or what's happening with their money. And the simple answer to your question, if your money's in an Australian bank account, it's safe. If it's not in an Australian bank account, it's not as safe. The risk is higher. And that's all you need to do is ask the question, is your money in a broker account, is that in a bank account? And the answer is no, it's not. When it's in a broker account, it's not a bank account. What brokers do in your account with the broker, if they've got cash in your account with that broker, and you go to their website and it says, this is much cash that you can trade, it's like a big bucket. Basically, it's and I won't go into all the technical stuff, but it's a big bucket, and you'll understand that. And all the accounts for that broker are in that bucket, so all the cash is sitting in their bucket. That's what's happening. So and that is in an Australian bank account, but it's not in an Australian bank account in your name. And that's the critical definition there. If you have a bank account in your name, with whatever the bank is, whether it's Commonwealth Bank or NAB or ANZ or whoever it is, if it's in your name, then it's protected by APRA and consumer laws and all that sort of stuff, and the government guarantees the safety of your money in a bank. But it won't guarantee the safety of your money if it's not in your name, which it won't be with a lot of brokers. I trade with Macquarie Bank because, and the whole reason is all around that, partly because it's simple with CommSec. I don't have this whiz-bang platform that has all these bells and whistles and lights and things going off to distract the hell out of me. That's one reason, and I don't need platforms that brokers provide anyway. I use a professional platform, as you guys know, and what you see me use every single week. So I would rather do that than use an online broker portal to do any trading with. In terms of the analysis, I just find they're just not good for that sort of stuff. But part of the reason why I trade with Macquarie is simply because all my money is sitting in Macquarie bank accounts, and they're all in my name. So when I trade from Macquarie, I just hit the trade and they take the money out of my cash management account. And when I sell, they put it back into there's no money in a bucket, if that makes sense. It's always going in and out of a bank account. Now, obviously, CommSec are one of the biggest brokers I think they are the biggest broker in Australia, and you probably have the same situation there if you're a CommSec client, that your money goes in and out. But if you're using somebody else, it's not going to happen. And you might go to them, well, geez, this is pretty safe. These people are safe, or my broker's pretty big, they're pretty safe. Years ago, back in the GFC, we had a lot of students or a lot of traders trading with MF Global, CFDs, and they were also trading stocks with MF Global. And MF Global, one of the biggest stockbrokers in the world at the time. Guess what? They went belly up and all the cash got locked down. And so whilst eventually clients got their money back, some of them took over a year to get some of their cash back, because all the trades got frozen and all the accounts got frozen because it was in a big pool. And that's what happened. So when you're dealing with market makers or leverage products like CFDs or FX, those sorts of things, you'll find that your money's in a bucket. And I know Jenny and I have met with some big institutional broking houses that wanted us to deal with them for our managed fund that we do. And the first question we ask is, where is the cash? And if they say, oh, it's in this sort of account, the bucket account, we just say thank you, but no thanks. And we walk away. But that's how most managed funds or managed investments are. That's all in this bucket, which is not in your name. But again, that's the real. So let's bring it back to the real simple thing. If you have an account with a broker and you don't have an Australian bank account where the money goes into and out of, the money will sit in a bucket and your money's not as safe in that. I'm not saying it's high risk or you're going to lose it all, But I've seen it happen a few times where people have lost their money because their money's sitting in a bucket rather than in their own bank account. That's, again, I might pay a bit more for trading with Macquarie, but hey, the safety is there, and I'm not, and whilst I won't tell you how much I'm trading, you can bet that it's not a couple of dollars. And so to me, even if you've got a couple of $1,000, you've got to ask yourself, can you afford to lose that if the broker goes belly up or that gets frozen? That's what you need to ask. So as I'm teaching traders, and especially if they're trading things like over-the-counter products like CFDs, etc., like that, I keep saying to them, pull your profits out all the time. Only leave as much money in the broker account as you absolutely need at any one time. If you want to take a new position, put some more money into it. If you make profits on that, take your money back out again and put it in a bank account until you need the money again, and then you transfer back to the broker, make the trade, and keep doing that and keep siphoning money out, and never leave big portions of money in a broker account. Always keep putting it into your own bank account in your own name. So hopefully that answers the question, but it's a really great question. So thank you for asking it, because it gives me the opportunity to share things that maybe some people don't really know. The next question we've got is from, and I'm going to say this slowly and hopefully I'll get your name right, Chaitanya, who says, thanks Dale, can you please review Sayona Mining? Why has this stock been so volatile for a while? It was recently added to the ASX 200. Why it's been volatile? That's a really good question. And often it could be just the market from that point of view of the market it's in, or it could be the commodity, or there's a whole range of reasons why something could be volatile, but it's more about looking at what you're doing with that stock. And obviously you don't tell me whether you own it or you don't own it, and that's what I'm going to have a look at the chart. So on the screen is a monthly and weekly chart, monthly on the left, weekly on the right. It's always been a volatile stock, and you can see that. And this year, if I go back, look at that, that's quite a volatile stock. And if you get rid of some of that, you can see how it was always volatile. And let me just drive through. You can see, look at that. There's massive moves. That was 2015. This move from that low there right up to there is 1,500%. What happened there? Not sure. It could have been, it might be an error in the data, but it could be maybe a backdoor listing. It could be anything, I don't know. But you can see how volatile this stock is quite regularly. Here's a big move here, another 1,000% through there. So this is a very, very volatile stock. Even some of these smaller moves here, look at that, that's 366%. We're on a monthly chart, remember. So here, more recently, this year, 254%. So to me, this is very much a trading stock, and it was down 71%, and more recently, it is up. So I don't know why, unless I study all the fundamentals of it, I'm really not going to be able to tell you why, and somebody might say that on the comments below, because they've studied a lot of the fundamentals of this company. But when you're talking about a stock that's 10 to 30 cents or 40 cents, they are a lot more heavily traded, and a lot of people, they are more easily manipulated too. And you can say it's just been added to the ASX 200. And you can see here, volumes right down here, and then it picks up and it goes down through here. But you're looking at this sort of stock, and you do get a lot of manipulation. That's why it's not a really good stock for retail investors, especially ones that don't have a lot of knowledge about buying and selling, because you can see this just went up like a rocket and had 1 week up in this whole downward move. So it is one of those stocks that you will find that you'll struggle with. I mean, 387 million shares at 20 odd cents, So the money going into that at times will be huge. Right now, I'm not too worried about this, because it is quite a volatile stock. It's probably coming down. You're probably going to get some people trying to bottom pick through here, because it's fallen quite heavily from that high there at 38 or just under 38 cents. It's now down there. It hit about 20 cents, so it's probably finding some support right through here. So you might find it goes up for the next few weeks and really makes a fair bit of money through here. But again, as I keep saying to people, it's not about buying the stock, it's about protecting your money and understanding how you're making money, because you could have bought this stock back in September 21 at 20 cents, and right now, last week, it hit the same price again. So, we're talking in a year, you've had these massive moves up and down, yet you're still at the same price at one stage last week, and you haven't made any money. If you buy and hold, this is definitely a trading stock. It is not a buy and hold stock, even though you could have bought it way back down in December 2020 or January 2021 and be sitting on a very, very, very healthy profit right now. But what imagine the emotions you're going through. You know, we're talking about right now, you'd be sitting on a nearly 3,000% profit if you'd bought in there, but that would be high risk trade. Now, again, if you bought through all through here, you'd still be making really, really good money. But again, this is not an investor stock. This is a trader stock. And what I find is traders, when they get these big swings in price, they get FOMO because they see a stock move up as fast as this one did. Then they jump in, and often they jump in near the top, and then it falls away quite heavily. And then they go, oh, I've lost all my money. And then they hold it and hoping it goes back up again, and then it goes back up again. And then, you know, sometimes they might sell out. Other times they'll hold, and then all of a sudden it almost gets back up to what they paid for it, and then it falls away again. And then they get that roller coaster ride all the time. Again, we clean all that stuff up for people, you know, again, whether it's my books, which you can still get my first book for free, on our website. You just got to pay the shipping. So How to Beat the Managed Funds by 20% is free. You just pay the shipping. Go to our website, front page of our website, the big button. That'll help you. My second book or my latest book, you got to pay a bit more money for that. But that's more for traders or people wanting to get into traders, and also help you understanding how to manage things like these stocks. But again, my Trading Mentor course, as I mentioned earlier, perfect to help you start to understand how the market moves. But again, if you're asking these sorts of questions, maybe you don't have enough knowledge to trade a stock like this, but good luck with it if you do. The next question we have is from Anton, who says, Dale, what do you think of Tyro Payments right now? Looks like it's confirming an uptrend on the weekly basis. Thanks for all your great videos. He says ATB, which now I know is all the best, from Austria, Anton. Thanks, Anton, for another question. So let's go and have a look at your stock, which is Tyro Payments. I'll just bring that up right now. Looking at this at the moment, you can see how it's been quite bearish, but look at the last couple of months. It's been really, really nice, holding up while the market's falling away again. Look, I think this looks really, really, really nice, but I will say that with a little bit of reservation in terms of, if we go and look at the weekly chart now, this has come off its all-time low back there in June at 60 cents. It's moved up quite nicely. It's looking really, really good here. This payment, how do I say it? This whole payment, you know, buy now, pay later, all different payment gateways, those sorts of things. This is an industry going through massive, massive changes and consolidation and everything at the moment. So you're seeing things like Afterpay, which is now Square, and that's been a volatile since, you know, Square came in or Block took it over, Square took it over, and it's now called Block, if I get my terminology right. But other ones, it's been a real challenging environment at the moment, and I don't see that they're not continuing on. You can see there's a big fall, 80-odd% from that high there back in October last year down to here. It's doing really, really nice. It's more than doubled in price. So I do like your pick, mate. I really do think it's a really good pick, Anton. You know, up 131%, looking nice through here. And it's not looking bearish. So again, if you've got some really, really good rules, I don't have a problem with you trading this stock at the moment, because it does look like it's going to be more steady and moving up. But will it go these big volatile moves again? Not sure at the moment, but I do like your pick. I think as long as you've got a nice stop loss on that and you're managing that trailing stop loss really well as it's going up, I think this could be a nice one for you, matey. But again, I really do some more research into the area, making sure you do understand it, because I think there's going to be a lot more consolidation and all sorts of things happening in this payment space, because there is a lot of competition out there, and banks also don't like losing competition, so they're out there at the moment pushing their sort of payment options, and you get those buy now, pay laters. And I think I just saw another one the other day about buying your education now and paying it later, and payments and all that sort of stuff. There's a whole range of ones coming out and more coming out. So please be a little bit careful with what you're doing, but great stock, and it is looking really, really good. Now I've got a question from TJ, who says, Hi Dale, really interesting episode. Thanks for your work. Are you able to cover AMP? I don't own this stock, but it's on my watch list for a long-term hold. AMP should never be on anybody's watch list for a long-term hold. It's been one of the most disappointing stocks since it floated back in the late 90s, and anybody who had a long-term hold on AMP would seriously be regretting that right now. So, and I say that from a trader's perspective, but a fund manager's perspective. And I don't hold any stocks long term, and I don't suggest most people should, because you're going to go through all the ups and downs all of the time, and we see people do on stocks all of the time. So, but let's go and have a look at AMP anyway, and I'll give you my thoughts on where I think it is. But I would just adjust my thinking to be more medium term. But looking at this stock, and you can see here, look, it's just basing out across the bottom here for the last sort of 12 months there. But look at this stock. If you look at it, look at that. All it has done, other than some moves through here, so you've got a nice, beautiful move from 2003 right through to 2007. So 4 years it did really, really well, fell away. And then for another few more years, from 2012 sort of ish to 2015, it went up, but it still had some dips through here, and then it's been trailing. So long-term hold, look, I think it's bottoming out. I don't think it's going to go any lower than what it's going. But how long is it going to go sideways? And this is what some people don't realise, is sometimes you'll see things like stocks that'll just go sideways like that for another year or 2 years while it's in this big accumulation phase. So yeah, if you want to do that, then that's fine, but make sure you understand that it could just go sideways, maybe vibrate between, $1 or $1, 90 cents and $1.20 or $1.30. And do that for a period of 6, 12, 18 months, 2 years, 3 years, whatever it is. Because AMP is, it has had a lot of troubles, and that's really why it's been so bearish. But is it something that's on my watch list now? I watch it, but I'm not really super excited about it, because generally when you see a stock being that bearish, what you'll actually see, if I can do what you quite often will see is things like that. You'll see things like this happen, and you'll just keep seeing stuff like that for a while, and it'll look bearish when it's actually bullish. It'll look bullish when it's actually more bearish. So it can trick you in and out of it. So, and you can make money through here if you know what you're doing, but you're a long-term buy and hold. So as I said, I wouldn't be doing that with AMP at all at this point in time. I think it's best just to ride the moves up and have a nice exit strategy if it starts to go down, because it has constantly disappointed the market. And I know so many times I've looked at that stock and go, yeah, this looks like it's going to go. And it doesn't. It just flips around and turns the other way, and that's why we're not trading that sort of this stock specifically. We haven't traded this one because it just does never look really, really good. Next question we do have is from Chris, who says, "Hi Dale, would you be able to look at URW? I purchased during the COVID low and sold at around $5. Since then, it's dropped quite heavily. Do you think it's close to bottoming out? I'd love to get back into it sometime in the future." How do I answer that? Yeah, I can have a look at the stock, but just because you've made money out of a stock before doesn't mean you will again. And this is where I'd strongly say, don't fall in love with stocks. Whether you make money or lose money, that's okay. So don't fall in love with a specific stock, as I said, because you've made money out of it. If you know what the stock is doing and you've done a lot of research into it, then you get stocks that are you can get into stocks that are very rhythmical, and as a trader we can trade those rhythms all of the time and do really, really well. But often I find investors make money on a stock and they go, I made 100% or 200% last time, so it's going to happen again. And that's a wrong thinking. Every trade is a brand new trade, and you need to know what you're doing to get into it. Now, I would, without being rude to you, I dare say you are lucky because you bought it at the COVID low. So many retail traders absolutely creamed us fund managers out of the COVID low because they took exceptionally high risk, jumped into all these sorts of stocks and rode that bullish wave up, while the big end of town and experts were saying, no, this is just going to be a little bip up and before it tanks again, because that's what happens most of the time. COVID was a completely different crash. It wasn't an economic crash. It wasn't a normal one like was the GFC. It was a normal economically driven crash. This was an event-driven crash. Something actually happened, COVID, that caused the market to melt down. So it had a completely different personality. So retail traders absolutely creamed it through there and made people like me look like bunnies. Because it's a simple thing is, we were trading on probability, and let's say there was 90% probability that it was going to happen the way myself and other experts were expecting and the big end of town were expecting. The 10% actually happened. The unthinkable actually happened, which is where the market just took off. And a lot of retail investors didn't know. They were at home watching screens and getting on Robinhood and all that sort of stuff and those new fintech apps and getting into the gamification of trading, and that just really push the market up and push those stocks up. So without being rude to you, I think you were really, really lucky. It wasn't necessarily good management, although I don't understand, or you haven't told me what analysis you did do. You might have done a shed load of analysis and it might have been a perfect trade for you and you've managed it well to get in and get out. But I suspect you're probably thinking, yeah, well, I didn't do a lot. Hopefully you're going to tell me that it stopped bottoming, because asking me the question, has it stopped bottoming, would tell me that you don't really have a solid strategy and you don't have a solid analysis method, because you should know that if you're trading this stock. But let's go and have a look at the chart. So let me go. Where is it? URW, so Unibail, Rodamco, Westfield. And I'm not saying it's not a good company. I'm just saying you're probably really, really lucky out of that COVID low, because you see this big meltdown through here. You bought it through here, obviously Westfield. I think you're just pretty lucky, because one big month up and then sideways. So it is going down right now. It looks really, really bearish. I'm not saying it's bottoming at all at this point in time. And look at this massive move down here over the last couple of weeks. That's a big, big move down. So, and retail, Westfield, they're struggling a little bit. I might say Westfield is actually struggling, but I'd say retail is still struggling and getting people back into shops as much, especially in Melbourne. Melbourne was dead. I was in the city last week and it was completely dead. At this point in time, I don't think it's fine. You can't say it's bottoming. Obviously, there's that low there at $2.41. You would hope that it would actually find some support there, but at this stage, you're probably going to at least minimum double bottom with 241 or go below that one. So the answer I'm going to get to your question is no, I don't think it's finding some support yet, and I don't think it's bottomed yet. Again, trade on confirmation, not speculation. Otherwise, you could be catching a falling knife, and then you'll be asking me in a few weeks or a few months' time going, I bought it at this and now it's at this, what should I do? And I get so many of those emails, or Janine and I do, from our live show and what we see through this YouTube video or this channel, that we get so many people buy stocks thinking they're going up or they're bottomed, when in fact they haven't. So, but thank you for the question, and also thanks to everyone for sending in your questions. But unfortunately, as is the case each and every week, I just can't answer everybody's question. So remember, to get the best chance to have your question answered is to publicly subscribe to our channel. That means there's a little red symbol next to your name when you post a question. That means I know that you're actually a subscriber to our channel. Otherwise, I have to scroll through thousands of people to figure it out, and I'm not going to do that. But I always answer people that are publicly subscribed to our channel. So to guarantee your question being answered, make sure you do that. And once you do that, you type your question below in the comments section, and then the next week, I'm going to answer that for you. But remember, here on this channel, we do these Monday market reports each and every week. We also do our live stream on Tuesday night, which is on 7 to 8 p.m. now. It's on Australian Eastern Daylight Savings Times now. So if you're in the States, remember, if you're in Queensland, remember, it's going to be a different time for you this week if you're watching from Queensland. So please make sure you get onto our show tomorrow night, 7 to 8 p.m. Australian Eastern Daylight Savings Time. If you do have a question you want us to answer for you, remember, you can send your emails through to info@wealthwithin.com.au, or you can pick up the phone and give us a call and ask Jenny and I personally on 92909988. Remember, hit the subscribe button now, click the bell on the right of it so you know when we upload and go live with our videos. Give us a really big thumbs up to say you like the show. That's it from me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.